Kia ora and welcome to the Trends Property Insight series. I'm your host, Andrew Johnson. In today's market, getting a home loan can feel like a maze full of complex criteria and moving parts. But what if there was a playbook to guide you through it? Today's guest is Sanjeev Jangra, a loan market mortgage advisor who has helped hundreds of Kiwis find their way through this process. Recognised as a Top Advisor 2024 by NZ Advisor, Sanjeev has a reputation for simplifying the journey and building resilient financial plans. Sanjeev's here to talk about his practical, step-by-step approach to loan pre-approval, the smart ways to structure your mortgage, and the key financial protections every homeowner should have on day one. Well, Sanjeev, thank you very much for sitting down and having a chat to me about the complexities and the wonderful world of mortgages and loans and all those great things to do with finances.
Thank you, Andrew. I'm so looking forward to this conversation.
Now, looking at your career, you've achieved a lot here in New Zealand. So for those people who don't know who you are and where you're working and what you do with your business and some of the accolades you've achieved, what have you been up to?
Okay, I'll just start from the beginning when I got into the banking. So I got into banking since, 2015 with Westpac. Stayed there for about 3.5 years as a lender. So I was doing all this home loan mortgages, all complex stuff. And then I moved to another lender, another bank. And then from there, I got an opportunity to become a business development manager for that bank. And the rest is history, because every mortgage broker I was going to, they were like, hey, why are you wasting your time with the bank? You should be a mortgage broker. And then at the end of 2020, I started my own mortgage broker firm as a one-man band. And fast forward now, we got a team of 6 people. We've been a top advisor list since 2023. So to get to that level, you have to settle 50 million plus in lending. When I say lending, it's residential lending only, not the commercial or anything else. So we've been settling quite a bit there. Plus, we've been helping hundreds of people to get on the property ladder every year.
So has the opportunity that you've been both inside the bank and now outside the bank, does that give you a different perspective of knowing what's going on behind the scenes when it comes to dealing with the banks?
It's got its own pros and cons. When I was at the bank, I could approve the whole home loan application in half an hour, and then you have a letter of offer in your hand in 40 minutes. But here, we have to go through a long process. We have to submit the application, wait for the lender to come back and all that. However, we have a lot more options now, rather than me only dealing with one bank. So we got 30 plus lenders on our panel. If one bank says no, we'll take you to second, third, wherever. We've got a lot of non-bank lenders as well who can help you in some tricky situations as well. So there's always some sort of a solution there rather than just saying a blank no.
And so for people who don't understand how loan market works, as an aggregator, you've got access, as you say, to a wide variety of both banks and non-bank lenders. Is that how it works?
Correct. Yeah. So we have all the main banks and even some smaller banks as well. Plus we got a lot of near bank lenders and the non-bank lenders who will be really handy in a tricky situation. As I said, we got about 30 plus lenders on a panel, or even 40. So there are some that people don't even know, but they can be really, really handy in some situations.
And you run your franchise right here in South Auckland. So what's it like running your business and taking some of that advice in terms of how you're dealing with money when you're running it as a business rather than just working for somebody else?
Yeah, it's tricky. So when I jumped from banker to mortgage advisor, first 6 months, 1 year was all about changing my mindset, being an employee to now running your own business. When I was assessing every single deal, initially I was like only looking at, hey, how can I decline this deal? Because you're so used to it at the bank, so you doubt every single deal. But then you later on convert yourself, hey, rather than being a cookie cutter, how can we be a solution finder for a client? Not just that, we value our time nowadays more than ever before. So if we have some decent deals coming our way, so we need to figure out whether or not it's worth spending our time on it. If I can't do this deal today, what can I do for the client that may work in maybe 6 months' time or 12 months' time? So we lay down the plan rather than just saying no.
And you talk about $50 million of lending in residential terms. That's given you some achievement being recognised by some of the industry. So the Top Advisor sort of rankings come out and you're ranked about 30 out of thousands of mortgage advisors and brokers?
Yeah, so that was last year's numbers. So The criteria for that was like you had to settle minimum $50 million, but we do way more than that. It's not just 50 million. And there's a lot of other things behind that calculations as well. For us, we don't care too much about the dollar value. For us, is like how many people I can actually help to get onto the property ladders. We have hundreds of first-home buyers. If I look at since when I started the business, initially I was doing a lot of investor deals, but then ever since the market shifted, interest rates started going up, our whole focus went towards the first home buyers. So in the last 3 years or so, majority of our business is first home buyers. And then now the things are changing slightly and more investors are jumping back into the market.
And you have a pretty holistic approach about how you talk to people about getting out of debt, getting into the pre-approval and so forth. So I wanted to explore that with you. So coming right back to the beginning with a client, someone who comes to you, what's some of the things you see that are initially barriers for people to getting themselves ready for pre-approval? What can people think about when they're trying to get themselves prepared?
When someone calls me, my first question to them is going to be, hey, what's your income? Some people have no idea what the income is, especially self-employed people. So if you are self-employed, we need you to get financials done by your accountant so we can see what your net profit looks like, not the revenue. You might be making $1 million a year, but what's the bottom line, right? So that's what we want to work on. And if you are a PAYE client, you need to know what your salary is. So keep your last 3 pay slips handy for us. Main thing we need is last 3 months of bank statements, and make sure those bank statements are very tidy as well. And the third thing we need is source of deposit. So some people might call us and say, hey, look, I want to buy this $1 million house. I can do whatever deposit is where is it coming from? So we need to see the source of funds because of the AML and all that stuff.
Yeah.
So these are the main 3 things, but the rest of it, we can take care of it. With technology nowadays, we can send you a link. All you need to do is just click on it, log into your internet banking, select your accounts, and the bank statements are downloaded in 5 seconds.
Yes. Yeah, I can attest. I went through that process when we were applying for our mortgage this year, and it was like, yeah, I can give you my bank statement because I just had to go and click the buttons and it got sent to my mortgage advisor. So it's really easy.
Exactly.
But you do have to make sure you've got information about what you know about what you want to do with these stuff.
Exactly.
So in terms of helping people into first home, at the moment, the market's probably one of the best times for someone to get in there and buy a property. Amongst all the different news that's out there, it's actually a very good time for buyers. So when people are assessing whether it's something they can actually do, how do they look at their debt, for example, and how should they be looking at how do I manage myself out of debt or get myself into a position where I can actually look at buying?
If you have personal loans, Afterpay, those sort of facilities, I would recommend get rid of them as soon as possible. If not, it really depends on what your income is. In some cases, you might have $30,000, $40,000 of debt, but then because your income is so strong, you might still be able to purchase a property. If not, we can help you doing a debt consolidation. So if you have multiple debts in place, I would recommend put them all in one single loan so you can manage those repayments a little bit better, and then apply for a home loan. And the other thing I would recommend doing is if you are currently renting, let's say your rent is $500 a week, $600 a week, but then the mortgage repayment is going to be $800.
Yeah.
If I'm looking at your bank account every single week, you have not even $1 left in savings, how would you manage to pay extra $300 to $400 every week in loan repayments? So prepare yourself. So as a ex-banker, when I was assessing those applications, I'll be looking at the loan application and I'll be, hey, look, on paper it looks really strong, but in reality, you get extra $300 to $400 a week, but you're not saving anything.
Yeah, it's tricky, right?
Yeah.
And so are there any things that people should not do? There's just things that really bug you. So I wish you hadn't done that. Or please stop doing that. Is there stuff that's just a no-go?
Yeah, a lot of time people ignore those unarranged overdraft sort of things. So people go beyond their means where they will be just spending over the weekend, especially when they have a debit plus card, because some of those bank cards will allow you to go above your balance.
Yes.
So then all of a sudden your account's gone into negative. For you, it's a minor thing because you're fixing it next day. However, every single day you are in arrears, it comes on your credit report, and the bank looks at the application and says, hey, look, these guys have no debt at the moment, and they're still going into arrears. What about giving them $1 million mortgage? How can they handle it?
Yes, right. So they're looking at financial responsibility and you sort of proving that you can deal with having someone else's money that you're going to have to pay back.
Absolutely. And then make sure you're not gambling as much, right? So if you're going to casino every other night,
Lotto's okay, like a little lotto once a month or something like that,
yeah,
but just
yeah.
not down to Sky City.
$10-20 is nothing, but like if you're spending like $1,000 in Sky City every weekend,
Yeah.
that's a big red flag for the bank.
So you do really have to take a look at yourself and say, am I presenting the best responsible version of myself? Because they're going to see the data anyway, right?
Absolutely. And then that's the beauty of going through a mortgage broker first before you go to the bank. Because our job is to make it work for you. So if I have any doubt on it, I can then give you a heads up. Hey, look, don't apply just now. Maybe wait for 3 months, improve this, and then we go to the bank. You have a 100% chance of approval.
Okay, so you're kind of like a glam squad for somebody to kind of pretty them up and make sure they're being presented in the best light.
Oh, absolutely. Being on both sides, we know what the bank wants. So we present it in that way.
And you talk about consolidating loans. Is that something you can help me with too if I've got loans all over the place? Can you help me get it into one spot?
Yeah, so we do have an asset finance team in place. So if you have like multiple debts here and there, and it's hard for you to manage them, and which is in most cases it is because you don't know which payment is going where. That's what we do is we put them all together in one loan. So your repayment is very low compared to all these different interest rates. Yeah, that would be really handy.
And so the process, once I've sort of got myself in a position and we're going to go to a bank or bank lender or whomever it might be, what should people expect? How does that process work? We don't do this every day, most of us. So what is the expectation people should have around what's going to happen once they get to the stage of, you say we're good to go, what happens next?
Yeah, so the initial stages, it really depends on what your deposit is. In some cases, bank will only give you a pre-approval if you have a live deal. What I mean by that is if you have a 20% deposit, we can arrange a pre-approval for you that will be valid for 3 months and you can just go out and do shopping and all that. But in some cases, if you have low deposit, banks can turn on or off their tap every now and then. So they'll be like, hey, look, we have very limited funding available. We will only give the pre-approval to the people, not pre-approval, sort of approval. It will only be given to you if you have a live deal. What I mean by that is you have to find the property first.
Yeah.
Put an offer on it and then present that application to us.
Right.
But as a mortgage advisor, I'll give you a very good range. Hey, look, your budget looks between this and that. Start looking for a property, and as soon as you find it, we'll submit your application, and within a week, you will have an approval in hand. So that stage is only for when you have low deposit. But every now and then, the banks are also open for pre-approval for low deposit loans as well. If you do have an approval, what I would recommend doing is go out there, start negotiating. When I was doing a property investment course, this is like 5 years ago. So these guys are pro in investment. They will teach us, they will ask us to go out there, go to a dairy shop and start negotiating on a can of Coke. Right? So if he's selling it for $2, just negotiate, say, hey, can you give it for $1.50? Right? Start negotiating from there. So now you're not buying a can of Coke, you're buying a massive investment, right? So your life's biggest investment as a property, basically. So go out there, you know your budget, what your budget is. Start negotiating. If they're asking for $850, offer $750, and then let them come down, and then you will go up, and you'll be surprised how often people get $30,000, $40,000, $50,000 off the asking price. So that's what I would recommend. And don't just expect you will, your offer will be accepted the first time. It will take maybe 30, 40 properties before you find the one you actually need.
Yeah, it's interesting because those terms that come around the money is not always necessarily the dollar value. I know in my case, we had 2 properties we've sold, and we actually, in one case, didn't actually take the offer that was the highest. It just had the better terms in terms of the settlement dates and bits and pieces because that person could present the best negotiated offer. Yeah,
even yesterday we did help a client. It was a multi-offer situation. The other party was giving them $20,000 more. And this guy came in and said, hey, look, I'm not going to pay you $720. I will pay you $700 and I will settle this house within 3 weeks. Whereas the other party was offering, it was a conditional offer subject to finance, 15 days, settlement 4 months down the line, and the vendor was really desperate to sell it because they couldn't afford the loan repayments. And then it took the cut and it's like, okay, 700.
Yeah. Are there any scenarios where the bank will say, yes, you've got this money, you're pre-approved, before they've actually started to present a property? Like, can I actually go out there just with a budget in mind saying my bank's given me 3-month window and go shopping as opposed to finding the house and then coming and say, hey, can we get the approval?
Yeah, and most of the time, like if you have 20% deposit, that's easy, right? Or you have equity in your property and then you're buying an investment. There's enough deposit in the mix. Then the bank will give you a piece of paper that says, hey, this is your max budget. Start looking for a property. So this really depends. And then, as I said, like in some cases, let's say you fit in Kayanga or a first home loan criteria where the bank will give you a pre-approval with even 5% deposit. That's your max budget. Start looking for a property. But then sometimes that offer might be a property specific. If I give you an example, let's say you're a couple with no kids. And when we presented the application to the bank, you told me you will have 2 flatmates living with you. Each of them will pay you $250.
Yes.
So we got the maximum lending on that basis. However, you ended up finding only 2-bedroom house. Now, where are you going to keep an extra flatmate?
Yeah.
Right? So now your budget is slightly lower than what we actually get you. So it's case by case.
Yes, of course. And so if you look at a typical scenario of a family with kids, let's just say, do you find that there's ways of splitting the loan? Like, are there things you can do to actually manage when looking at that income to debt ratio that allows you to manipulate the way the loan has been constructed?
Yes. When the bank is assessing that loan application, they don't care too much how you're going to structure it because they are assessing your loan on a floating interest rate or their own internal test rate. So let's say your interest rate is 4.75 for 1 year, but when they're giving you that loan, they're testing you at 6.5%.
Yes.
Right? So they got their own internal testing rates. So structure-wise, lending is not going to be that much of a difference. However, what we recommend doing with most of our clients is splitting that loan. So if you have a, say, $600,000 worth of mortgage, don't put all of that as one loan. Split it. So maybe put half for 1 year, other half for 2 years, or vice versa. Or you can have a small offset or a revolving credit facility in the mix so that like while you're saving throughout the year, you can offset your money against that loan and then save the interest.
Right. So you just mentioned 2 things there, offset and revolving, right? So they're terms that kind of make sense, but for those people who don't talk that language every day, what does it actually mean for me?
So I'll give you an example. Let's say you have a $600,000 mortgage. When we settle on the loan, let's say today is your settlement, and then you have about $20,000 sitting in the background that you want to hold as a backup, right? You don't want to spend it. It's just your savings on the side. What I would recommend doing is don't leave it just in the savings. Offset it against the mortgage. And then on top of that, you and I are having a chat, and then you're saying, hey, look, after all my loan repayments and everything, I will have probably $2,000 saved every month on top of my, regular day-to-day spending. Then what I would do, I would split your mortgage into 2 or 3 different parts. I want you to have about $30,000 to $40,000 of your mortgage as an offset. So let's say out of 600, we got $40,000 as an offset account, and then you got $20,000 sitting in your savings account.
Yep.
You are only paying the interest on $20,000, which is the gap between the two, right?
Yes.
So on one side, you have $40,000 loan, and you got $20,000 sitting in your savings account. The repayment for $40,000 will be based on $40,000 limit. However, the interest cost is depending on the difference between the two. So you're paying this loan way faster.
Yes.
And then every month your saving keeps growing. And hopefully within a year, you have almost $40,000 saved and you're paying 0 interest for this portion of the loan. So that's offset, or it can work with the revolving credit as well.
And can I use that setup, say if I'm buying a property that I need to renovate, right? I see it needs some touch-ups. I want to do $30,000 worth of stuff to the bathroom or the kitchen, or just to make it livable to what we want to have for our personalization of the space. Can I use sort of setups like that to help that? Yeah,
so this money sitting in your savings account is yours, right? You can do whatever with it. It's not locked or anything. No. The only difference here is you're paying a floating interest rate on this portion. But this is another thing people worry a lot. Is, I don't want to pay a floating interest rate. Like, why would I pay extra 1% on this loan? But if you do the math, you're not paying 1% extra. You're paying half the fixed rate because you only paying on the difference between the two.
Yeah.
But whenever you need this saving, you can use it.
You can use it, yeah. That's clever.
Yep.
And with people who are approaching like the end of their terms, you talk about having fixed term maybe for a year for half of it and 2 years for the other, maybe fixed on rate and floating on the other. But when you're coming to the end of your term, what should people be thinking about in terms of, especially at the moment where things have been happening with the OCR and the rates as they are? What are some of the things you talk to your clients about when they come to the end of their term?
If your mortgage is coming up for renewal in the next, say, 2 to 3 months, don't fix it just right now because we're expecting another 1 or 2 rate cuts between now and, say, Christmas. So according to Reserve Bank, there might be another OCR cut in October or even November. So wait for that and negotiate hard with your bank. Most cases, banks are very, very competitive at the moment. If you have been with the same bank for more than 3 years, ask them to offer you any cash contribution if they can. If they don't, you have the option of refinancing to another lender.
Yes.
So if you have $1 million mortgage, your existing bank might give you $4,000 to $5,000 cash to retain you, whereas other lender might give you $8,000 to $9,000 to refinance to them.
Yeah, which can be very helpful.
Yeah, that money can go back into your mortgage.
Yeah, well, we had the scenario where we had to cover about 2.5 months of a large mortgage before we could get the property sold. We had 2 houses and one that we were selling to clear out everything. And we used that $10,000 that our new bank gave us to cover, X amount of months of that mortgage. But it's like, okay, this is a no-brainer for us to do it this way. So it's funny how when you look at different options, it can certainly help.
Absolutely. You can be loyal to the bank, but then is that bank actually looking after you? Is another question.
I'd like to, like my personal bank I've been with since I was 4, but they're not the bank we ended up getting a mortgage with. So sometimes I still keep my personal banking with them because I've got some loyalty there and I feel they've got loyalty to me, but actually probably they don't. But it makes me feel better about myself, I suppose at the end of the day.
For sure.
Now, one of the other key parts that you're talking about sort of the bank looking at what you're able to achieve and certainly what they think you're going to be able to pay back. So protection, when it comes to some of the different things that people need to consider, you are not just talking about getting the money sometimes, you're actually really looking at protecting things like loans and bits and pieces. So can you talk to me a little bit about what you go through with setting people up so they've got something to fall back on?
Yeah, a lot of time I see people taking this massive mortgage on, but then they'll come back, hey, I can't afford the insurance, for example. Say, hey, you can't afford not to have insurance.
Yeah.
I'll give you an example. I had this couple in 2021 at the peak of the market. They sold a small house in Menureva. At that time, their mortgage was only around $350,000, $400,000. And they ended up buying something out in West Auckland. And then all of a sudden, their mortgage from $350,000 to was, I think, $1.2 million. Right? So if you look at that couple, they were like gym junkies, like really, really fit. So fast forward 8-9 months later, she took maternity leave, right? So they decided to have a baby. So she's on a maternity leave, and all of a sudden he got some sort of a medical situation where he got something to do with his brain, off work. Luckily, we had a income protection cover in place for them when we did the whole setup for them. So insurance was covering their mortgage repayment for the next 2 years until he recovered. If they did not have that thing, the insurance in place, these guys would have lost their house. Not even just the house, they would have lost all their deposit as well because the market tanked within a year.
Yeah.
So the $1.5 million house they bought, that was only worth around $1.2, $1.3 million within like 18 months. So that's when he was really, really thankful that he had that insurance cover in place. So insurance company was covering his mortgage repayment. And on top of that, because he had trauma cover in place, they also paid him $100,000 as a lump sum payment. What we did with that $100,000 was we put that into a revolving credit facility. So he doesn't pay interest for that portion of the loan.
Right.
So if that cover wasn't in place, they would have lost the house. So that's why I recommend people to have at least some sort of a basic protection in place because you never know what's coming.
Absolutely. Well, yeah, it sounds like you had the perfect plan for the unexpected in that particular case. So speaking of that, with the market change and certainly house prices, I hear a lot of stories about people that when rates were low and the prices were high, they've borrowed and increased their mortgage and now they're stuck because even if they wanted to sell, there's not enough equity in the house or, there's just been so much market change and they've got themselves in a bit of a bind. What do you do with people that are in that situation?
For us, it's mainly looking at the overall loan structure. So obviously they can't sell they can sell if they want to, but they will lose all the deposit, because we do come across people bought at say 900, but the house is only worth 750 today, lost all the deposit.
Yeah.
All I can do for them is negotiate with their own bank, because a lot of people don't understand that when the bank is looking at your loan to value ratio, they don't just look at today's value. So if you're going to a different lender, they will only look at today's value. But if you're going to the same bank, let's say you bought a house for 900, but on paper it's only worth, based on current scenario, it's only worth 750. Your current bank will still value the house at 900, whatever you purchase at. So if your loan to value ratio is sitting at like below 80%, we can negotiate with your current bank and ask them to remove the margin that they're charging you. So your repayments are a bit cheaper. Or we can negotiate a little bit of cash back with them for you.
Interesting.
Yeah. So in those cases, you're better off staying with your own bank rather than going to another lender. And in a lot of scenarios where you're stuck with a known bank lender, we can help you refinancing from there to a main bank, so you get a little bit of a breathing space.
And you again use some language there like non-bank lender, who you talked about at the start of the show.
Yeah.
Who's a non-bank lender? What's a non-bank?
So these are the entities who are not restricted with all these rules. So some of those rules that Reserve Bank have put on the banks don't apply to them.
Mm-hmm.
So these are private lenders or backed by banks funding. So there are two types of non-bank lender. One we call near bank. So their credit criteria is almost like a bank, but a little bit lenient. For example, you may, like if you're going to a main bank today and you're buying an existing home as an investment property, you need 30% deposit.
Mm-hmm.
But these lenders can do it with 20% deposit.
Right.
Or you have a little bit of a default on your credit history. Let's say you had a couple of $100 default with some company 2 years ago. Bank is a bit fussy about it, but these companies won't care. Yeah, all good. It was 2 years ago. Don't worry about it. We'll do that.
Right.
And then we have private lenders or strict non-bank lenders who are completely different. So they are, sometimes we call them asset lenders.
Mm-hmm.
For them, it all depends on how much equity you have in the property. So let's say you have $1 million house and you only need $400,000 or $500,000 against it. So they don't worry too much about your income as long as you have the equity in the mix, and then you have some sort of exit strategy. So if you are off work for the next 6 months, or you have some other plans and you can't make the repayments for the next 3 to 6 months, they can actually capitalize the interest on top of your mortgage, and they'll give you like a year or so to prepare to go to a main bank or some other, or sell the property. So that's when non-bank lenders will come handy.
Right.
And in some other cases where, let's say you have only been into the business for less than a year, banks would usually need either 1 year financials or 2 years full financials.
Yes.
Whereas these guys can do the loan based on last 6 months of GST returns.
Right. Okay.
Yeah.
Yes, because that can be a barrier, right? In terms of if you don't have your full previous financial year statements, all that stuff. Yeah, that's right.
Exactly. So non-bank lenders can be really, really handy. There are a lot of things you can do with non-bank lenders. So yeah, obviously the interest rates will be slightly higher because they're taking more risk.
Yeah, and it's safe, right? Like it's got the same rules and regulations to protect people. I mean, I know you work with people that are trustworthy, but it's like, are they generally, how does they get secured? Is the same way as a bank does?
Yes. So nowadays, they have to go through the whole process like the bank anyway. Your house is safe, so don't worry too much about it. So, but if you're doing some private lenders directly, they are a bit risky. However, if you're going through our panel and you're going through those companies who are backed by the banks as well, they're pretty safe.
And do they have the longevity? Like, are they going to be there in 5 years' time, 10 years' time? Like a bank, you kind of expect is going to be there with the 30 years of your mortgage, right? But how does that work? Like if they don't go out of business, what happens with that?
It really, really depends. I can't say they can't go out of business because I've seen like one company just recently.
I'm not trying to be negative. I'm just thinking of what the audience might be thinking.
So what they do is then they have the obligation to pass you to the next lender. So if we look at HSBC, right? So HSBC is one of the biggest banks in the world. So they sold their New Zealand mortgage book to a lender called Paper Money last year or 2 years ago, actually. But then what they did, sold the book to Paper Money, but Paper Money was calling all these clients, telling them what the new rate's going to be. So now all of a sudden, you used to be on the cheapest rates. Now you're going on a non-bank lender's rate. Then Paper Money would pass those leads on to mortgage advisors or someone else to help the clients. If the client could refinance to a main bank, then we would help them.
Right.
If they can't, then they have to stick with Paper Money.
Right.
So there's always some sort of a plan in place. They can't just walk out.
Yes.
It's not that easy.
Good to know. And typically for you, or maybe there's not a typical scenario, but for the first home buyer or someone sitting there going, right, we want to take the opportunity, the market's good for buyers. What's the timeline in your experience for someone? What's a realistic expectation of that journey that's ahead of them if they're starting out from scratch to become a first home buyer?
For us, we can get everything done within a week as well, in some cases.
Okay.
And it depends on what your deposit is and how urgent the situation is. So sometimes people come to us, they already know what property they want to buy. They know what their deposit is and where it's coming from and all that. We can get things done within, say, 2 weeks. But in most cases, if you look at average first home buyers, it takes about, say, a couple of months at least.
Okay.
To do the whole process. So we will get you a pre-approval within, say, 2 weeks max. However, it will take you maybe 3 to 4 weeks to find a property. In some cases, people take up to 6 months to find the right property.
Yeah.
Right? So the pre-approval will be valid for 3 months. And after 3 months, we just need a written confirmation from you whether anything has changed in your financial situation. And given the bank doesn't change their lending criteria, they will extend that pre-approval for another 3 months. So you do have that time on your hand. So we don't rush people to do everything. So what we'll just give them heads up. Hey, look, bank is changing their lending criteria. Your lending might go down if you wait for another 2 months or so.
Yeah. And in the current market, what's the feedback you have from people who've gone through the process of being a first home buyer at the moment? Because a lot of us have access to different generations who, I remember when we bought our first house, like just has no context back in the 80s or the 90s, or, to what today's like. So what's been the feedback from first home buyers you've dealt with in the last year or two? Is it as easy as they thought, or was it harder than they thought?
I think it's really, really easy at the moment. It's just the main issue we're facing at the moment is like a lot of people have lost their jobs. But the ones who have secure jobs and stuff, so they're actually loving it. So I just helped a family last week. They were renting somewhere, paying $750 a week, but they bought their own house in South Auckland. Their loan repayment is actually only $700 a week. So it's actually cheaper than the rent. So now they have their own space. They don't have to worry about the landlord giving them notice every other day. Yeah, so those sort of things. So things are really, really easy, and the interest rates have come down quite a bit. Like even if you look at in the last 12, 15 months, the interest rates have come down more than 2%. That's massive.
Yeah, it is.
Yeah.
And what's the biggest misconception you think people have about mortgage brokers, the mortgage experience, that kind of stuff? What's the biggest one you find?
People think mortgage brokers are expensive or they cost money, but that's not the case. Like we don't charge people anything because the banks pay us commission when you settle on a loan, but at all case by case basis. So we will only charge you a fee if we're taking you to a lender where that lender doesn't pay us any commission, or it's very complex sort of a deal where I have to spend a lot of time, but we will be giving you those figures upfront. So there's no surprise later on. The other biggest thing I see in people is fear of judgment. They'll be like, hey, look, I don't want to show my bank statement, so this guy is going to judge me. We're not here to judge you. We're here to work for you to make the deal work. Right? So if you open up, if you tell us what happened in the past, then we can present the deal in a way that's it's more likely to be approved.
Yes.
Right? So if you're not telling me you had a $200 default somewhere, or you forgot to pay your electricity bill when you moved the house, and then it ended up with a bake-off, for example.
Yes.
That's a minor thing. But if you didn't tell me and the lender found out, now it's very tricky.
Yeah, right.
Right. So open up, and then we'll make it work for you.
So you're like a doctor, right? You need to tell them exactly what's going on with your body so you can take it. Or you're like a lawyer, but you're just way cheaper, right? So you tell them everything, but you don't charge horrific fees like some of the legal teams do.
Exactly. I mean, a lot of people like call us and then be like, hey, why should I come to you? Why can't I go directly to the bank? And that's the exact example I give them. Hey, banks are like pharmacies, right? If you need a Panadol or whatever over-the-counter stuff, you go to the bank. But if you need a specialist advice, you go to a doctor, right? Who can prescribe stuff for you.
Yeah, and it's that insight, everything you've just been describing, that you just don't know until it's too late. And
Absolutely.
You get yourself tied up in all these knots of different bits and pieces. And so you talk about exposing or people feeling nervous about showing their paperwork. Are there some good habits? You talked about not gambling so much, but are there other good habits people should do about how they control their expenses, their spending, things they should just start to do now before they need to come and see you?
If I go on social media today, like you go to any page, like people are just moaning every day. You'll be like, oh yeah, I'm making so much money, but it's so hard for me to save for deposit. Or how can I afford this $1 million house? I don't have $200,000. First of all, you don't need that much of a deposit, and you need to be in a savings habit before you actually apply for a loan. If you don't know where your money is going, my advice is print your last 3 months of bank statements and highlight each and every spend, and you will, find a lot of things that you can cut off, right? So the other day I was doing this exercise to myself, and then I found out I was spending like nearly $300 on subscriptions I've never used, right? So chop them off. So do that, save as much as you can. Sell the stuff that's lying around your house, doing nothing, right? Sell that off and then put it into a savings account. If you really can't control your money, maybe increase your KiwiSaver contribution. But only do that if you have already been contributing in KiwiSaver for the last couple of years and then you want to buy a house next year. Because there's no point starting KiwiSaver today when you want to buy a house tomorrow, right? Because you can't take that money unless you have been there for 3 years. So I would recommend increasing your KiwiSaver contribution first of all, so the money is already sitting in your savings account before it touch your bank account, so you don't see it. And also, a lot of banks allow you split payment. So if you're getting $1,000 a week from your employer, you can give them 2 accounts. So $200 goes straight into your savings account. And then $800 in your normal day-to-day account. And then remove that saving account from your internet banking, so you don't see it. And then you only see it after a year, and all of a sudden you go, oh, I've got thousands of dollars sitting there.
I mean, it's a funny thing because when you get a mortgage, it's a very good personal trainer, coach telling you that's how you have to manage money. So it's kind of useful to kind of get used to the idea of being quite disciplined before you have this very big sort of thing to worry about.
Absolutely.
Now, for you, what do you get out of it? What is the joy that you'll sort of why you do what you do, part of your job? What's the thing you enjoy the most?
It's just a thrill of helping people. So when I came to this country, probably 2018, so I came with almost nothing. So we built from scratch, done all sorts of random jobs. But now I get the joy of helping a lot of people getting onto their first home. So someone came from India, I wasn't even speaking English at the time, right? So very basic English. And then now we help a lot of Kiwis every year. It's the thrill of getting someone on a property ladder. And not just the property ladder. We also talk about other things. We talk about what the future looks like, or the children's future look like, or how can they build an investment portfolio when people have a misconception that only rich people can buy investment properties. We have like unlimited examples of people on a very, very basic income who have built portfolios in the last 4 years, even when the market was falling. So we do that. If you look at our Instagram, Facebook page, we have hundreds of photos of our clients, happy faces and stuff. So it's just that joy. And obviously, you don't work for free. So there's a business angle as well there. So we get paid by the bank when we help people, but it's mainly how can I help more people to get onto their own home rather than just helping the banks.
Yeah, that's awesome. And I think when you touch on there about investment properties, because it's something that people don't really think about, but you think it's a viable option for more people than probably those out there actually consider as an option.
Absolutely. A lot of people think they need 30% deposit by their investment property. As I said, we have non-bank lenders who can lend you up to 80%, on existing properties. Or if you're buying a brand new or newly built property, you can borrow up to 90% on it. So you only need about 10% deposit. And other misconception I have here is like, oh, I have to top up my mortgage so much, like I can't afford that investment property. Buy in the regions, right? So there are a lot of properties out in the regions where you just put whatever deposit and the rest of that will be covered by your tenant. Right? So you don't have to. So there are cash flow positive properties out there as well. Really depends who you're talking to.
And you're based in South Auckland here in Tamaki Makaurau, but do you deal with people outside of the region? How does that work?
Yep. So for us, our client base is pretty much everywhere in the country. Like even this week, I'm helping this family from Gisborne. It's funny that hopefully they're not listening, but so they have a really, really strong income. Over $200,000 salaries coming in, but they have loans with pretty much every single lender in New Zealand. So what we did for them, we consolidated their debts, put them into like one loan. We did 3 months later, we applied for a home loan, but the bank found out there were more defaults that they didn't tell me. So we ended up going to a near bank lender. So they're charging a little bit extra, but we got an approval. Just today, they have signed a contract, right? The mortgage repayment on their new home is going to be $200 cheaper than the rent they were paying, right?
Wow.
So those families came through referrals from someone in Gisborne.
Okay.
Right? So it's just like we help one person and then tell others, and then we help, as many as we can.
And so if people do want to get in touch with you, what's the best way to get hold of you?
Just Google my name, Sanjeev Jangra from Loan Market. We're pretty much everywhere. You will see a lot of Google reviews, Instagram, Facebook page.
Yeah, there's a lot of 5-star Google reviews on your page, and some great social media stuff as you talk about with the happy customers.
Yes.
Excellent. Well, hey, look, for someone who wasn't speaking English so many years ago, I think people will be saying, hey, that man's talking my language, because I think some of the advice and information you've been able to shed some light on has been really, really helpful. So I appreciate you coming in and having a chat with me.
Thank you.
And thanks to you for spending some time with us. Don't forget you can find all our episodes on our platform by visiting trendsproperty.com. Here you can browse ideas, inspiration, products, people and places offering solutions for you on your property journey. Remember, you can sign up and join the Trends Property community where you can connect, collect and collaborate with others, or take advantage of our educational guides to help you take the right steps in the right direction. As always, thanks for listening. We hope to see you next time on the Trends Property Inside series, where we help you find your place, your way. Ka kite. Goodbye.